Unless you've been living under a rock for the past 3 months, we all know that the coming interest rate rises are starting to be passed through to the consumers. Now, in times like these, it is really important to prepare for the coming interest rate rises. So today I've got my sister Crystal here to explain exactly what we do when we do get served those interest rate rises and how we can maximize our profits and reduce our expenses. Thanks so much for joining us today, Chris. I'm really excited to share today's information with everybody. Now, for a little bit of background, Crystal's my sister. She's a head buyer's agent at Pumped On Property and has helped hundreds of our clients purchase hundreds of millions of dollars worth of real estate. She's got over 7 years experience working as a buyer's agent and has seen many different interest rate environments where they've been high and come down, and now obviously being low, coming back up and normalizing. So when you are starting to get prepared for these coming interest rate rises, what's generally the first thing that you will do to get prepared for these interest rate rises?
Yeah, I think the first thing that is really important is reviewing your financial situation. So my husband and I do this at least once, if not twice a year. We sit down and sort of create a bit of a budget, get a spreadsheet of expenses, income, assets, liabilities, and get a really good understanding of everything within our life that we spend money on. Review our financial situation from the top down, properties, debt, those fixed expenses in our lives, our home loan, all the way through to the things we spend money on. And gaining an overall understanding of our financial situation gives us the confidence to know where we can maybe cut expenses, increase income, or what we need to do to prepare for those potential changes in our monthly costs.
The good thing about creating a spreadsheet like this as well, I find, is you don't get that bill shock. Because over a 3 to 6 month period, you're probably going to receive majority of those bills, and you can start to put this in the spreadsheet. So the way that Tay and I have ours set up is it's month by month. We do the financial year every single month. At the end of the month, we actually update everything in those spreadsheets as well. So we know exactly when the big bills are going to come through. We know when all of the little bills are coming. We understand exactly how much income we're earning and everywhere that's coming through. We know exactly what our expenses are, and if there is any changes, we're putting these into the spreadsheet, and it gives you a really, really holistic understanding of your income, your expenses, all of the different things that we need to understand. So step one is 100% to go out there, create this spreadsheet, track all of your income and expenses, understand when those bills are going to be due, so that you are prepared for what any expenses coming up. Now, the second thing, Chris, is obviously going to talk to your mortgage broker. What does this generally entail, and why would you actually go see a mortgage broker?
Yeah, of course. So your mortgage broker is going to be the best person to speak to about if there's a chance you can get a better interest rate. So if you know an interest rate rise is on the cards, can you fix your current lower rate? Are you in a position to refinance to a different bank or financial institution that's going to offer you a better deal? Obviously, you've started with that financial position, so you can send that all to your broker and figure out where there might be a way to change your monthly mortgage expenses.
Yeah, this is huge, and this can save you thousands and thousands of dollars, which will offset those coming interest rate rises. And I'm a perfect example of this as well, because my recent property that I purchased back in 2021, I wasn't in a good enough financial situation to go to one of the big banks that generally offer the better interest rates. So I went for a second tier lender, Resimac, and now those interest rates, I'm getting served up. I think it's at like 4.5% now. So the first thing I do when I get that letter is I call my mortgage broker. Hey, Paul, any options for me to refinance over to a better, bigger bank that might offer me a better interest rate? And he said, Simon, no worries, especially because you've got so much equity in the property right now. Your LVR is in a better position. The big banks will be more willing to look at you, and they should be able to offer you a much better interest rate, which will end up saving me thousands of dollars every year from just one property. So definitely go talk to your mortgage broker. The third thing is to reduce your expenses. This can be quite challenging, but I love doing it. It's like anywhere I can save a couple of bucks, how do we do it? So what is your first step in reducing those expenses, and how can we do that?
Yep. So touching back on the spreadsheet we spoke about before, that's a really good way to identify fixed expenses in your life and things that are a little bit more like discretionary spending. So fixed expenses in your life are things like phone bills, internet bills, electricity bills, insurance, food and groceries. So the things that you need to have just to get by. But there are ways within those fixed expenses that you can look at reviewing the cost of them. So you can approach your energy provider and see if they can offer you a better rate, or shop around for a different company that may. It might save you a couple of $100 a year. Same with your insurance. You can potentially review your insurance, see if there's a way that you can contact different companies or ask the company that you're with for a multi-policy discount or something like that. So food is another fixed expense in your life. You need to do a grocery shop every week. You need to feed your family. But there are ways within that grocery shop that you can look to revise those expenses. So shop at different suppliers. You've got Aldi, Woolworths, Big W, Coles. Maybe shop around if there's ways that different shops offer the same brands at a cheaper price.
Yeah.
Is there things within your grocery bill that you can eliminate? And food, then that kind of goes into discretionary spending as well, because a lot of people spend money on food each week that's not just based around their grocery bill.
So when we're talking about these more variable expenses, you know, you've got food, eating out, coffee, you know, holidays, entertainment, all of these different things. Now, I think it's important to realize that we're not telling you to just like stop living your life. We're just saying that there is simple ways that you can reduce your expenses and increase the income to put yourself in a better, more manageable position while these interest rates are coming up. So, you know, maybe it's about going and getting the coffee from the grocery store as opposed to buying 1 to 2 coffees every single day. Like if you reduce that, that's $50 to $100 per week for some people on coffee alone. Like, boom, there's the interest rate rise.
Exactly.
So obviously you need to have the things that you enjoy in life. You know, entertainment, same thing. Maybe you don't go to the movies and you choose to stay at home and watch a Netflix movie or, you know, something like that. Maybe avoiding all of those fun things that we want to do when the opportunity presents itself, but obviously just being mindful of how much money you're actually spending on these discretionary. Now, for myself, I actually budget my discretionary spending every single week, because if the boys are like, hey, we're going down to the pub to watch the footy this weekend, do you want to come down, have a few beers and watch the footy? Of course, I want to go down and do that. So I fix that into my discretionary spending. And on the weekend, I love going and grabbing a coffee and going out for brekkie with the boys after a surf. So I want to keep that in my life, because if I'm not doing that, then I'm not connecting and I'm not enjoying my life to its fullest, but I budget that into my discretionary spending. Something that our brother Ben has just done with his wife is they're actually taking cash out and giving each other a weekly allowance, which is cash for their discretionary spending as well. So where sometimes you might just go and get that poke bowl on the weekend or something like that. When you're using cash, if you've run out, you've run out, and you know you've got to sacrifice a little bit more. So we can certainly reduce our variable expenses. This is a choice. You need to figure out what ones are worth sacrificing or not. But then the fourth thing I want to talk about today is reducing bad debts or liabilities. I've found a lot of people do finance the wrong things like cars, boats, caravans, jet skis, these types of things, credit cards, personal loans, holiday loans, afterpay. These are what you would consider liabilities or bad debt, because they're non-income producing. And as these interest rates come up, your credit card rates, your afterpay rates, your loan rates, they're all going to rise at the same time as well. So in an ideal world, we eliminate all of these bad debts, but at the very worst, reducing those to, you know, make it a little bit more manageable, because obviously the home loans, it's a big expense, but we all need a roof over our head. When it comes to some of these other ones, you just have to be quite mindful. I find reading the book Rich Dad, Poor Dad gives you a really good understanding of the differences between liabilities and assets. I also find reading the book The Barefoot Investor really helps you tidy up those weekly income and expenses so that you are maximizing your profits and minimizing the expenses. But then the last thing we wanted to talk about is increasing income.
Yeah.
A lot of people forget to do this. It's a nerve-wracking thing sometimes, but we are seeing inflation come into a reality. We are seeing some wage growth in majority of the industry. So how can we go about increasing the income?
Yeah, it's really interesting because a lot of people find it quite daunting to go and ask for more income, but there's a number of ways you can do it, especially as an investor. So things that I've personally done in the last 3 months is I've started with my rental properties. I've approached my property managers for potential rental rises. So I've been in a position where I could increase 2 properties by $45 per week. That alone's offsetting my interest rate rise for the next probably 2 to 3 rate rises, to be honest. The property manager said that was completely fine, in line with what the market value was at the moment, and both were up for renewal a couple of months down the track. So that's one way that I've combated the rental income. You could also speak to your property manager about maybe negotiating their fees. So if they want to keep your business, they may be able to offer you a discounted property management rate, which will potentially increase what ends up in your back pocket each month at the end of your sort of rental distribution, which that's a really good way to kind of renegotiate with income. If it's available to you, you've got the opportunity of maybe working overtime. I know my husband, he's a contractor, so he does kind of go in half an hour earlier and stay a little bit later. He's a builder on site, so that's something he can do. And it just means he's getting that extra half an hour to an hour per day, which definitely helps across the course of a month. And if that's available to you as well, where you can pick up a half a day extra work or a weekend or something like that, if there's opportunities to pick up some overtime, then definitely give that a crack. I know a lot of people I'm friends with are starting little side hustles, and especially me being at the stage of life I'm in, I've got a lot of friends that are mums that maybe don't want to return to work as soon as they thought, or can't return to work as many days a week as they thought. So looking at starting side hustles or that sort of thing, there's definitely avenues there, or picking up sort of those passion projects really that may be income generating.
And then of course you've got the most daunting one, which is potentially asking for a pay rise if that is within the scope there as well. But I think the key takeaways from today's video is there is so many ways that we can reduce our expenses, and there is also opportunities to increase our income. Now, as these interest rates are going to be passed through the banks and onto the consumers as us mortgage holders, those expenses in your life will increase. So try and find unique ways to reduce those expenses or increase the income so that you can offset these rising interest rates so that you can continue living your best life and making the most of the opportunity out there. Now, if you haven't already done so, guys, please like this video, subscribe to our YouTube channel, and share this video with somebody that needs to hear it at the moment. I know a lot of people are burying their heads in the sand because of these rising interest rates. It is so important to take control of your life, implement as many things as you possibly can so that you can still move towards achieving all of your goals. You know, we just want the best for absolute everyone. We want people to cruise through this period of time. We want people to start treating their properties like a business to maximize the income, reduce those expenses to the best of your ability. But anyways, thanks so much for tuning in today, guys. We really appreciate it. And Chris, thanks so much for coming and joining as well.
Yeah, no worries.
Woo, that's a wrap.
That's a wrap.
That's cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. That's so nice. Oh.